Forex trading is a world of endless possibilities. It's a global marketplace where currencies are bought and sold 24 hours a day, 5 days a week. Imagine having the power to profit from the ebb and flow of international economies right at your fingertips. That's the allure of Forex trading. It's not just for big banks or wealthy investors anymore. Anyone with an internet connection and a bit of capital can dive in, but let's be clear, Forex trading isn't a get-rich-quick scheme. It's a serious business that requires knowledge, skill, and discipline. The potential rewards are high, but so are the risks. That's why it's crucial to start on the right foot. You need to understand the basics, develop a solid strategy, and use the right tools to succeed. In this guide, we'll walk you through everything you need to know to start your Forex trading business. We'll break down complex concepts into bite-sized pieces. You'll learn how to read currency pairs, understand market trends, and make informed trading decisions. We'll also show you how to use cutting-edge tools like Go High Level to streamline your operations and scale your business. Whether you're looking to supplement your income or build a full-time trading career, this guide will set you on the path to success. Remember, every successful Forex trader started as a beginner. With dedication, continuous learning, and the right approach, you too can join their ranks. So, are you ready to embark on your Forex trading journey? Let's dive in! The Forex market might seem intimidating at first glance, but once you break it down, it's not as complex as it appears. At its core, Forex trading is about buying one currency while selling another. It's like exchanging money for a foreign trip, but on a much larger scale. The goal is to profit from changes in the relative value of currencies. Let's start with the basics. In Forex, currencies are always traded in pairs. The most common pairs include EUR USD, Euro US dollar, GBP USD, British pound US dollar, and USD JPY, US dollar, Japanese yen. When you see a currency pair like Euro USD equals 1.2000, it means €1 is worth 1.2 US dollars. If you think the euro will strengthen against the dollar, you'd buy this pair. If it rises to 1.2100, you've made a profit. Understanding market dynamics is crucial in Forex trading. The market is influenced by a wide range of factors. These include economic indicators, political events, and even natural disasters. For example, if the US Federal Reserve raises interest rates, it could strengthen the dollar against other currencies. As a trader, you need to stay informed about these factors and how they might impact currency values. One of the unique aspects of Forex is its 24-hour nature. Unlike stock markets that open and close at set times, the Forex market is always open somewhere in the world. It starts each day in Sydney, then moves to Tokyo, London, and New York. This round-the-clock trading provides opportunities, but it also means you need to be strategic about when you trade. Some currency pairs are more active during certain hours, which can affect liquidity and volatility. Now that you understand the basics, it's time to take your first steps into the world of Forex trading. The first thing you need is a trading account, but before you open one, it's crucial to do your homework. Research different brokers and compare their offerings. Look for a regulated broker with a good reputation, competitive spreads, and a user-friendly trading platform. Many brokers offer demo accounts. These are practice accounts loaded with virtual money. They're an excellent way to get hands-on experience without risking real capital. Use a demo account to familiarize yourself with the trading platform. Practice placing orders, setting stop losses, and taking profits. It's like a flight simulator for traders. You can make mistakes and learn from them without any real-world consequences. Once you're comfortable with the demo account, it's time to fund your live account. Start small. Many brokers allow you to open an account with as little as $100. Remember, in Forex trading, you can use leverage to control larger positions with a small amount of capital. But be cautious. Leverage is a double-edged sword. It can magnify your profits, but it can also amplify your losses. Before you place your first trade, develop a trading plan. This is your roadmap for success. It should outline your financial goals, risk tolerance, and preferred trading styles. Are you a day trader who wants to make multiple trades each day? Or are you a swing trader looking to hold positions for days or weeks? Your plan should also include rules for entering and exiting trades. Stick to your plan religiously. Emotional trading is often the downfall of beginners. Section 4. Mastering essential Forex trading strategies. Success in Forex trading isn't about luck, it's about having a solid strategy and sticking to it. There are numerous trading strategies out there, but let's focus on a few that are particularly useful for beginners. The first is trend trading. This strategy involves identifying the overall direction of the market and trading in that direction. If the trend is up, you buy. If it's down, you sell. It's simple in theory, but it requires patience and discipline to execute effectively. Another popular strategy is range trading. This works well in markets that are moving sideways rather than trending up or down. In a range-bound market, you buy near the bottom of the range and sell near the top. It's like buying at a discount and selling at a premium. To use this strategy effectively, you need to be able to identify support and resistance levels, the points where the price tends to reverse. For those who prefer a more analytical approach, there's fundamental trading. This strategy involves analyzing economic indicators and geopolitical events to predict currency movements. You might look at things like GDP growth, inflation rates, or political stability. Fundamental traders often hold positions for longer periods, waiting for their analysis to play out in the market. Technical analysis is another essential tool in a Forex trader's arsenal. This involves studying price charts and using indicators to identify potential trading opportunities. Common technical indicators include moving averages, relative strength index, RSI, and Fibonacci retracements. While these tools can be powerful, remember that they're based on past data and don't guarantee future results. The key is to use them in conjunction with other forms of analysis and always manage your risk. Section 5. Navigating the risks. Smart management in Forex. Forex trading can be highly profitable, but it's not without risks. In fact, most beginners lose money when they start trading. That's why risk management is crucial. It's not just about preserving your capital, it's about staying in the game long enough to become profitable. The first rule of risk management is never to risk more than you can afford to lose. Treat your trading capital as a business investment, not as money for your daily expenses. One of the most important risk management tools is the stop-loss order. This is an instruction to close out a trade if the price moves against you by a certain amount. It limits your potential loss on any single trade. For example, you might decide never to risk more than 2% of your account on a single trade. If you have a $10,000 account, that means your maximum loss per trade would be $200. Set your stop loss accordingly. Position sizing is another crucial aspect of risk management. This refers to how much of your capital you allocate to each trade. A common rule of thumb is the 1% rule. Never risk more than 1% of your account on a single trade. This might seem overly cautious, but it helps ensure that a string of losses won't wipe out your account. Remember, in Forex trading, preservation of capital is key. You can always make more trades, but only if you have capital left to trade with. Diversification is also important in managing risk. Don't put all your eggs in one basket. Spread your trades across different currency pairs and different strategies. This can help smooth out your returns and reduce your overall risk. However, be careful not to over-diversify. It's better to be an expert in a few pairs than to spread yourself too thin across many. Start with major pairs like EU or USD and GBP USD, which tend to be less volatile and have tighter spreads. Section 6. Scaling your Forex business with Go High Level. As your Forex trading skills improve and your profits grow, you'll want to scale your business. This is where a tool like Go High Level, or GHL, can be invaluable. GHL is an all-in-one marketing platform that can help you automate and streamline many aspects of your trading business. From lead generation to client management, GHL can handle it all, allowing you to focus on what you do best trading. One of the key features of GHL for Forex traders is its ability to create and manage funnels. You can use these to attract potential clients if you're offering Forex education or signal services. GHL's drag-and-drop funnel builder makes it easy to create professional-looking landing pages and email sequences. You can set up automated follow-ups to nurture leads and convert them into paying clients. GHL's CRM features are also incredibly useful for Forex traders. You can use it to keep track of your clients, their trading preferences, and their performance. This allows you to provide personalized service and build long-term relationships. The platform also includes a powerful calendar and scheduling tool. This is perfect for setting up strategy calls or coaching sessions with your clients. Perhaps most importantly, GHL provides robust analytics and reporting features. You can track your marketing efforts, client acquisition costs, and overall business performance. This data-driven approach allows you to continually refine your strategies and grow your business more effectively. Remember, successful Forex trading isn't just about making profitable trades, it's about building a sustainable business. With Go High Level, you have the tools to do just that.